Let's talk to Bryan Noble. He's the founder of Trader Noble. Very good morning to you, Bryan.
Hi Nick, thanks for having me.
You write a daily blog, you give out signals. What's going on? It's getting quite lively, isn't it?
It is. We saw the first 2% fall in the S&P and the Dow this week in 14 months, which is finally where volatility is picking up. The VIX has gone up to 15, which is good. But against all that, I look at the internal reading in the market, and incredibly, the McClellan oscillator, which has been negative for most of January, hit a low of minus 199 closing print last night. Historically, when this gets to minus 250, minus 270, it's a buy signal. So despite the Dow only falling 2% or 2.5%, yet if we've one more down day today, the MO could actually give a good long-term buy signal.
That's interesting. And when was the last time that gave a buy signal?
It gave a huge buy signal when Trump got in.
Right.
And we've had a massive move against that. Now, on the negative side, we have so many Hindenburg omens. We had another Hindenburg omen confirmed on Monday. You have to get two of these within a 10-day period for a confirmed signal. We now have, I think this must be the 9th Hindenburg omen. They're generally valid for 4 months. We had a couple in November, December, which are valid to March, April time, and now this one will extend it into May, June frame. So we still have that in the background.
I spoke to an analyst in the summer, and there was a number of these signals. For somebody who's not familiar with that signal, is this about market breadth?
Yes. Yeah, the McClellan oscillator basically measures the internal reading in the market. It's based on the highs and lows on the New York Stock Exchange. It's been a the MO is an incredible signal. It's the first thing I look at every day. It gives you a couple of telltale signs. For example, if the Dow and the S&P went lower today and the MO breadth improved, say from minus 199 to minus 150, then internally the market's beginning to improve, and it's a quick indicator that the markets are not going to sell off further.
And that's a technical analysis default, is it?
Yes, yeah, and it actually works. It's one of the best indicators out there. Against that, I'm as bearish ahead of the market. I just think we're still over the third standard deviation, as we were talking about last week on the US market. 27.92 is the third standard deviation. We're currently trading 28.30 today, so having had a high of 28.78 on Sunday night. And of course, then we've got the FOMC this evening and Yellen's last meeting as chair, but there's no press conference scheduled.
Right. In terms of the VIX jumping up, do you give commentary on that?
Yes, I think that obviously, the more volatility. I think yesterday was one of the most volatile trading sessions I have seen in at least over a year. I mean, the Dow must have done 1,500 points with all its up and down moves. It was fantastic, especially for trading. So, finally in the last 2 weeks, we're seeing a bit of two-way trading again. Before it's just been one way, and most traders love two-way trading. You can get your, if you're lucky enough to get your calls right, then you don't have to bother for the rest of the day. You can take your money and then wait for the next.
Understood. Okay, and just to wrap up, the markets obviously are very, very volatile, and you say that traders, it's good for traders, but not everybody can watch it all day long, can they?
No, but I mean, if you follow my, I'm not trying to promote my own system, but if you follow my signal and just, to put the calls in the morning, I give all the take profits, stop losses for each position. So, it takes about 15 minutes in the morning to put all the calls on, and then you just let if you take the emotion out of it and just leave the calls, you'll actually be surprised how well you can do. Like the last 2 weeks, the blog has made over 800 points.
Wow. Okay. On that note, Bryan, thank you very much indeed.
Thanks, Nick.